Welcome everyone to a small video update for Bitcoin. Today is going to be interesting. I'm currently short at this wick on Bitcoin, and this is based on Armageddon, which looks kind of messy, but if you zoom in, it gives you the best intraday information that you can find or won't find anywhere else in the market. So the way that this works is we're targeting this take profit level right here, and we're going to be using leverage based on the stop loss right here. Now you can put your stop loss right here for a greater risk to reward ratio, but because we're at the start of the day and you see where these lines started, this is the start of the day for Bitcoin. This is the new session. This is what's going to decide we're going up or down. So currently we're resting on pivot, and I don't see that this pivot will hold. This is usually how beginners or market gurus will try to tell you to catch a level and buy it because it's their support. I don't necessarily believe in psychological support and resistance zones because I think they're all temporary, but I do believe in algorithmic trading and levels that are actually interesting to machines and sophisticated algos. So MarketSpy, it's in the name, scans for these occurrences and gives you approximate levels of where the institutional trader might be interested in taking his trade to. So currently this take profit level is a 2-to-1 risk to reward ratio. Now we have had pyramids at the bottom over here, and you technically are supposed to be buying these as price is moving up. But once you see that it's made some advancement, the momentum is dying, starting to look a little choppy, these pyramids are actually going to pull price down. Now the tricky part here is, do we have any support when this occurs? If this occurs and we have some support, and our support is not being measured by using trend lines, I have these for your reference just to illustrate the point, because yesterday I said that this is a basic visualization of the trend here, and if we break it, we go to 111, which we did. But once again, our ribbon right here is called EQ3. This is where the big heavy sellers are, buyers are found if price is below it, and this is where they're found if price is above it. Currently, we have had 1, 2, 3 locations where the buyers have stepped in, but they were unable to push price above its previous high right here. We also have a simple trend over here that shows you that we have broken down, retested it, came back down, attempted again, and failed, and posted a lower high relative to this peak over here, and are now most likely going to head down. And so instead of having to wait for the breakout to play out, if you're an advanced trader, you do not wait for the candle to close below this breakout level on Armageddon. Instead, you wait for a confirmation. So you want price to come down here, close below this level, it will start to go up again, reject, and eventually come down here. We don't know how fast this is going to happen. It could look something like this. It could, so this candle over here, this one little candle, can go down, confirm, go back up, trigger the stop loss, maybe, doesn't have to, but and then fall over here. We have some reassurance here that as long as we're posting lower highs, we're now in a downtrend, and we're looking to capture this profit area, because quite honestly there's no other support areas that are resting here, and the 61 Fibonacci level on specifically the daily open is a good place to sort of aim for. is a good place to place your orders or maybe take profit at. So if I activate DSR, that gives us previous low right here, which aligns with our profit target, which we may have to take profit a little earlier. And your technical trade setup from over here to over here is considered complete. If you're able to capture this window and exit early and do this consistently, then you will keep making money. But if you want to go for bigger reward, obviously you have to risk more. And I'm not saying risk more money, because if your stop loss is placed at this level, your amount percent of your account that you decided to trade, for example 1%, remains the same no matter what. It's just that your risk becomes higher in terms of missed opportunities. So instead of you could maybe, if this reverses and gives you another signal, you could have taken profit here, maybe wait for a breakout continuation, take another trade here, wait for price to maybe reverse from this level, go up, break above this level, take another trade over here, and so on. So you're going to miss out on all of this because you have decided to hold for a great risk to reward ratio trade. And that is the price that you have to pay with your time, with your health, and with mental turbulences that you may experience as a trader who does this. Now we have support over here in the EQ3, but I said 1, 2, 3 touches. It is most likely that it is not going to hold. It will continue lower. And this is what I'm expecting price to do. This is going to take a long time. So I'm currently short. I am currently underwater. I'll just quickly show you what that looks like. Here's my tactics trading terminal. I have about $250,000 USDT worth of contracts, which equates to about 3 Bitcoin going down, and my entry point is literally right here. So you can see that we're very early. We have our stop loss placed over here, and we're risking to lose 1% of our account if this triggers, and we go down. So let's just wait for this to play out. Yeah, if it doesn't, and if we lose the trade, well, that's just part of the game. That's the name of the game. There's absolutely nothing we can do about this, but we have to try, because every time we see a signal, and you know, we have been waiting this whole range over here, and price wasn't able to make new highs, and it's the weekend, I understand, and people on Twitter are saying buy Bitcoin, so I think it's going to go down, and this is why I'm in this trade. Yesterday in the Discord update, I told you that I don't like the way that Bitcoin is creeping over here, and my hunch was correct. As we came up to this level, lost the baseline, retested that, swept the highs, because you're not going to get an easy trade out of this. So they have to sweep the highs, come back down below the ribbon, and start going lower. And here we had a similar take profit situation. So this was a very handsome trade right here that you could have captured. And if you don't take profit at these levels, price simply reverses, and this will reverse as well very aggressively. So you better take profit when that happens. Now, depending on your leverage, you might be exiting sooner because you don't want to have the headache of having to endure volatility, because every time price moves up or down, it changes your unrealized P&L, and that can affect your judgment going forward. So either place a stop loss, step away from the charts, or monitor it. And if you're in profit and you feel like it's a good time to take profit, then just simply take profit. The most important thing is to be able to have these kind of signals that are not just speculative in nature, but probabilistic in nature. And MarketSpy is very, very good at doing that. So first immediate target is at 11,276. And then we bounce up, and then we will see if we can actually stay below this yellow line over here. As long as we're below this yellow line, it's a short. If we go above it, it triggers our stop loss, then we're looking for a long, and we're looking to break out of this range here. If not, we're going down towards this red box. Very simple. Please enjoy. I'm going to pause the video, come back to it with the results later. And yes, I have accepted that I might lose this. And if you're looking for guarantees that this should work as you expect it to, remember, we can only do our best in the markets. And if you're not risking more than what your portfolio is worth and you're willing to lose only 1% of your whole portfolio, then you're doing great. The rest is up to God, literally. So, see you guys soon. Now, you see what price did over here. We went below the daily open over here, started to come down. The next high probability level is obviously this green line BC, as I have mentioned, and look, we hit it to the T. Now, this is the tricky part here, is do you take profit or do you wait for it to go lower? So it's almost like you're starting to reassess your chart over here. And many beginner traders, they exit early. And I would say that exiting early at high probability levels are, those are good habits to have. Those are good habits. Because, so we're currently, we're currently in profit, and we could book this, right? Or you may say, well, this is not enough. I am risking 1% on my account. Why would I be taking 0.32% over here when I can hold it to go down? And this is the part where I cannot really help you, but I will say, first I have MarketSpy Trend Runner, and this is a proprietary indicator that tracks a specific type of candle to create, it starts to seed developing trend lines. And as long as you can do it manually if you wanted to, but as long as you're below this trend line, you can keep holding until you have a breakout of this trend line. Now, what can happen here, and the question is, are you willing to risk it, is if price bounces on the next candle, goes up to here, you're instantly in a negative, but it goes up to here, breaks out, consolidates, goes up to here again, goes up above, and it takes out your stop loss right here. And this is why taking profit on time is so important. But again, if you're willing to risk it and you're willing to hold, then you will be rewarded, and that's the risk. If you have a high hit rate, super high probability system like MarketSpy, you don't have to worry about missing out on opportunities because you can easily take profit here. We're almost at 1% of our account. You can take profit here, wait for another setup, and do the same there, knowing that your stop is safe, your directionality is correct, and there's absolutely nothing that you need to worry about. So this orb over here, as long as it stays below this price, now it can fluctuate, like I said, it can go up here, come back here. You have to project what this might do. And first, you might need to find some support. The next support point is right here. And this is where your understanding lies in terms of what the orb do. The other thing you can do is this. You can start grinding, go up to here, and this would look like this on the chart. It would look like this. Then when it has a break over here, it does something like this, goes sideways, finds support on the candle, jumps up, and this is when we have a breakout. So is it worth it testing, all of that, when you can simply take profit whenever you can. So I think, in my opinion, you can find another setup, get to your 1%, but consistency matters. 500 bucks is pretty good for such a small time frame, and you can be doing this consistently again and again and again. But for the sake of the lesson that we're going through right here, I'm going to hold this trade until either it comes to our support zone at previous low over here, breaks the downtrend at this point over here and starts going up, or sweeps our stop loss. And I just want you to meditate on this, and I stand to lose about $2 grand by showing you this, because normally I would be taking profit where appropriate, and for me this would be exactly the area right here. So risk. I hear helicopters. Platoon, is that you? Is that you landing? And so this is the kind of uncertainty that many traders deal with. And I want to exercise your brain a little bit and say, okay, what about, right? If this were futures or equities or something that is a little different to Bitcoin, right? And what if you were in the scalping mode? Would this be not a great result on the day? 0.5% of your account with a proper stop loss placement, with a proper entry, with a proper high probability level exit. What is discipline? And what is guessing? Okay, I'm in profit, but I like to be more in profit. Perhaps you can watch some of the YouTube videos out there that showcase where traders are in profit trading futures, and they're significantly in profit, but they want more, so they keep on holding, and they're saying, well, you know, why would I take profit now? I can see if I can scale it down. I can see if I can get my risk to reward box to go all the way down, right? And they're at half point, the market is giving them money. And my question to you is, you know, and this is one of the key points here, where do you want to be right? Do you want to be greedy? Or do you want to be grateful, and do you want to be systematic about this? How good is your system? Is it able to give you these consistent results on these kind of setups again and again and again? Are you able to follow the rules when we as market spies know that even though you might be exiting early, you're one of the few who's actually securing profits versus others who choose to hold in hopes that they would be rewarded more later? This is the decision that you have to make. This is something that you have to realize, come to a conclusion after many years of trading. I realize one thing: take profit, wait for the next setup, because humans lack understanding of time. And so we think that just because this spill was significant, that we're going to keep witnessing the next candle be the same. Remember, this candle, look at the ATR, just exceeded all the other candles in this range by almost twice the size of an average candle. This is what causes exhaustion. These guys, they never exhaust. You have very steady increase in price, but once you have an ATR, this is a very balanced ATR, for example, to the downside, and these are the kind of candles that exhaust price, and maybe whoever was selling here, it doesn't really have any more capital left to sell. So a couple other things that may work in your favor if you're looking for confluence is if you are looking to, let's move this out of the way. If you're looking for momentum, you have to understand the momentum tracks price, and it takes time, but it started over here, it started falling over here. You could have confirmed this with our C bar over here, confirmation bar. But you have all this momentum, like these yellow lines is the same as this trend line over here. So is this. So this is a flat visualization of a simple trend line that looks something like this. You've got 1, 2, 3 points of interaction, and this is where the trend line disappears. Price breaks out, it shifts to a bullish blue trend line. You see this? So the bullish trend line goes all the way up to here, starts to lose momentum, breaks down below yellow, and continues lower. And so using a basic trend line strategy would benefit you greatly if you were to use discretionary sort of trend line strategy together with something that's a bit more algorithmic, like MarketSpy. MarketSpy is an algorithm. It's just not automated because you are the second part of the algorithm. You are the engine that executes. So if you're struggling with execution, perhaps this is due to lack of good educational content and brainstorming sessions like the one we're having right now, where you look at this from every possible angle and you question the move. And it would be nice to capture this in profit, step away from it, wait for the next setup. What is a setup? Well, one of the first setups that you look for on the daily open directionally is first, did the daily open above or below its previous average? And here, this line is the daily open. You don't really need any special indicators for this. This just shows you that momentum is bearish. Not always, but for the most part, like this, you have some chop, and then it kind of goes up. Here you confirm with your momentum. And if it's rising and you're above the daily open over here, and you have the moving averages, you have the trend line support, you have all the good stuff that's happening here, you have the filling of the C bars happening over here, then you know that the direction is up. Knowing that allows you to attempt to trade with leverage. So on a pullback, you go all in, and perhaps one of the better places to put your stop loss is just slightly below any of these indications. You can use the trailing steps, which are these blue little steps over here. Then you can use the moving average. You can use the actual daily open as your stop loss because price interacts with it for a bit during the open, and then as it continues to go in the direction, it never comes back to it until the next day, maybe, if at all. So right now you're in a chop zone. You have your previous daily open over here, and this is potentially a good target for this price. But once again, do you want to take profit or do you want to sit in this trade for more? If you want to sit for this trade for more, you can expect two things. You can expect this to reverse on you, stop you out. You can attempt another similar setup. It will reverse on you, stop you out. You can attempt another one. It will reverse on you, stop you out. You can attempt another one. It will reverse on you, stop you out. But eventually, let's say you do get it right. Let's say eventually you land on a trade that actually doesn't reverse and continues. Now let's say you're aiming for the usual stuff, 2R, 3R, 5R. And what I can promise you is that by the time you land on that setup, on the 2R, you're going to basically recover all those previous attempts where you're trading in anticipation and holding the setup, not taking profit at these levels, where you're continuously looking to profit more, like those YouTubers who don't take profit on time when they're in profit. So I like to play little mind games to make myself feel good about taking profit on time. First of all, I look at the market as almost like a supernatural entity. It just does things that are really hard to explain. And let's say that sometimes what this translates to for you in real life is, let's say you're walking down the street and suddenly you stumble upon, now you risked everything by going out on that street. You risk your life because there are cars, there are dangerous people out there, who knows what might happen. But you risked it all in order to go for a walk. You are sure that nothing is going to happen, that nothing is going to fall on your head, but you're risking getting in trouble just by being out there. Elements, exposure, Antarctica, you're out in the cold. And suddenly, while on that walk, you stumble on $500 on the floor, right? And you can pick it up because it's been literally given to you because you went for a walk, because you risked going for a walk. You can pick it up, or you can say, you know, that doesn't really look too good, and I think there's more down the road. And you look down into the distance and you're like, I wonder if there's a trail of these of this more. Maybe somebody dropped it, and they dropped it again and again and again. And this is what essentially you're doing here. It's that insane. You're not taking profit because you think you'll find more. And that, my friends, is the difference between a real market spy and a fake market spy. A fake market spy creates anticipation and forges information. A real market spy gathers intelligence and information that is presented before him, and he knows that he doesn't know. But if his setup plays out successfully, you know, two things over here. We can bring this to one risk to reward. It's a one-on-one game. The one risk to reward ratio puts you closer to here. Now, on a setup like this, if you're willing to wait, this is a 15-minute time frame, so this could take forever. But if it does go lower, then the likelihood of this hitting there's higher probability of this hitting than you hitting your 2R, 3R, and 4R. Now, doesn't matter what system you use, right? I want you to understand this. You see these candles? Would you agree that no matter what system you use, that anywhere here would be a great entry point, and the stop loss would be here, regardless what system you use, the stop loss would be here. Would you agree with this? Unless you're scalping and risking a lot to place your stop loss at these levels, for example, generally a stop loss here. So it doesn't matter what system you use. If you're trading and you're looking for a 1-to-1 risk to reward ratio, then I think this is probably the best that you can do when it comes to these markets, to aim for one risk to reward ratio. It's just that the system actually has to be really good and deliver on this 1R. In our case, our confirmation at breakout is just here, but we already have signs of a potential reversal. So do you want to be holding this, or do you want to take profit? Once again, I ask you. Now, right now, because I am in profit and I only need about 30% to bring this to 1%, which is insane performance every time, I think I'm going to take profit rather than wait for price to hit my targets, because my system will give me another trade today down the line, And that is all I care about. Your system will give you once in a lifetime opportunity, and then maybe perform, maybe not. And then you'll be guessing and you're gonna get chopped to death while market spies take profit and walk away from the charts, earning a little bit of money every day. For some, this is a monthly salary. You can take this, pay to somebody for their monthly payout, and you can get things done, like virtual assistants, for example. You can hire for $800, $600. So, my friends, let's take profit, because I'm satisfied with this. And yes, I do want to demonstrate this for you, but I will secure this. Let's do 90%, break even. And do it like this. Sorry. Limit 90%. We go to break even and buy long. And that should be, if price is refusing to, our bid is not hitting, we can try to use maybe a chaser order. But yeah, relative to the chart, this is just starting to play out. Maybe it will go down all the way to here, and you could have profited from all of this. This would be like a 10-hour risk to reward. But there are no guarantees. This can also reverse on the next candle. It is Sunday, and it can rip up really, really hard, because on one hand we have bullish momentum reversal. On the other hand, we have the starting of a tiny downtrend on the intraday into Monday. So very interesting how this works, isn't it? Me, I stumble across something on the ground, I pick it up, I'm grateful, I exercise gratefulness. You may be different. You may think that, trading is about, and this is for day traders only. If you're investing, good luck, because you don't really know. You're ignoring all this. You don't know if it's going up, if it's going down, if it's going to go sideways or whatever. And you don't probably care, because you have already risked everything on it. Now look at the amount of orders sitting at this level. I don't know if they're fake or real, but this is telling us that there's a bid level where price is sitting right now, where people are starting to notice that maybe this is where they should take profit also. And so it's kind of working in your favor over here. But we'll be 90% out in just a second. And hold the rest if we can. 90%, and that runner can go to wherever it can go. It can go down, it can go up, it doesn't matter. But our break-even point is set at entry, and there's very little that can happen here that will put us out of our profit on this trade. And that's all I wanted to talk to you about in this video. If you want me to record my trades all the time and show you this, because it's honestly, I have been doing this for so long and showing you how to tackle these markets and play these trades like so for so long. And I told you that you need the ATR equivalent, which is 128 on this chart, and this is in excess of your ATR. A $200 to $100 distance is probably more than enough for you to make money. So I'll just be repeating myself every time I trade, because nothing changes. I see red, I go short, I look at the 8, even here, for example, if I saw this rejection and I saw the red candles, I'll be taking profit, because there was immediate support right below. I see pyramids, I buy them. I see pyramids at the top, support being tested many times. I have my trend line below the baseline. I have bearish momentum confirmation going down. I'm not crazy to be long here on the pyramids. Here, I'm crazy enough to go ahead and buy them. Here, I'm also short because of momentum. And it goes on like this. So even if I record myself doing this every day, it's not really going to help you until you start applying this to your trades and studying charts like this. MarketSpy remains the best system that you can get your hands on to get real-time updates on the chart without having to deal with buy and sell signals, but rather attain understanding. And understanding is king here.